the diverse pool of people capital that we have now, again, unrecognizable from what you would have seen a decade or so ago. And I think just as when you look at a portfolio and you look at the importance of asset allocation, you see that in human capital as well.
Hello and welcome to this week's Tea Break. I'm Al-Enazi, here alongside my co-host Yuri. Joining us this week is Edward Glyn, Head of Global Markets at Calastone. Edward, thank you so much for joining us. And to set the scene, what tea have you gone for?
I thought that I was supposed to bring the tea as opposed to be offered the tea, so I did bring the tea. Again, matcha, a Japanese green tea, and matcha, which has got toasted brown rice in it. I'm interested to see what Yuri thinks about it as well.
I'm really enjoying it, and you certainly wouldn't have had this in any of the offices I worked at in the 1980s. That cultural change since the 80s. We've had a piece, Investing in Tomorrow's People, by Sabari Raja, managing partner of JFF Ventures, and she writes that it's vital for portfolio managers when they're investing in the scalable startups to expand access to skills, career pathways, workplace equity, to really think about their employees. Edward, you've worked for several decades in the asset and wealth management industry. What are the key cultural changes that you've seen in the workplaces?
Gosh, well, I think that the city now is unrecognizable to how it was when I kicked off some almost 3 decades ago. I started off my career at then Thompson Financial. Fascinating time to be working in the industry because I was selling data, but it was actually paper-based. So I used to go door to door with these paper directories that were updated, every 6 months or so, selling financial information. But in the 3 years that I was there, it evolved from paper through floppy disk, through CD-ROM, and then the internet. So I think one of the biggest cultural changes that we have seen is very much the advent of new technologies. And I've always been involved in that part of the industry. And I think the second one is, I think we're probably nicer to people now, more accepting than we used to be. I remember when I started working, it was a proper US sales culture, and I was on a system called a draw, which meant that they lent you your basic salary and you had to earn it back in commission. Otherwise, you owed it back to the company. So can you imagine interviewing somebody today for a new job, and when they ask about the package, you say to them, well, actually, I'm lending you your basic salary, but you have to earn it back in commission. And if you don't make it, you owe it back to the company.
Would you work on that type of contract?
Not for me, Yuri, not for me.
It teaches you how to sell them.
And in that time, we've seen a lot of big changes in leadership, and inspiring leaders that, front up these big groups, with a lot of great characters emerging from, the developing markets. And we have a piece here. India has been a major focus, and it was fascinating to see some of the views from Sriya Priya NS, CEO of the Intrust Family Office. She talks about a picture 10 years ago of men debating investments, tax strategies, and business legacies, with women confined to philanthropy and cultural affairs. Edward, has that balance changed in asset management?
The diverse pool of people capital that we have now, again, unrecognizable from what you would have seen a decade or so ago. And, I've spent my professional life in asset management, and I think just as when you look at a portfolio and you look at the importance of asset allocation, you see that in human capital as well. And absolutely, you're going to have a much better result at the end of the day if you have a diverse group of people working for a company, just like you would have a diverse pool of assets working towards the success of your portfolio.
Well, for my sins, I've been a regular visitor to Luxembourg, and there've been big changes taking place there, because for so many years it was the very efficient but very dull back office. Nobody really wanted to go there. It was considered something of a hardship posting. It rained all the time. It rained more than it did in Manchester, where I spent some of my formative years. there's been all these billionaire families moving in there, 20 of them. The Schlumberger family, Bertrand Cost, who I interviewed a few months back, and they're driving some changes there because you've got some people actually managing portfolios from there, coming up with innovative ideas rather than just crunching the numbers and clearing the trades and overseeing the plumbing in the back office. You've been going to Luxembourg, Edward, probably for more years than you'd care to remember. Have you seen something stirring in those boulevards there?
I think it still rains as much as it did when you started going there. Actually, if you look again in my industry, asset management, the offshore side of the funds industry has been dominated for many years by Luxembourg and by Dublin. And both of them, again, you're talking serious amounts of rain. I think actually when you talk to people who live and work in Luxembourg, they all seem hugely pro. Great standard of living, it's safe. And you're right, for many years, I think a lot of it was very much around back office processing and operational footprint. But again, you see the growth of the asset management space, and Dublin and Luxembourg have managed to preserve their positions as the places for offshore funds.
Another asset class that seems to be, on the minds of everyone right now is crypto, and that's one of your pet topics, Edward. And we have an opinion piece about reimagining the movement of money from crypto specialist Oscar Uslund. He says it's a mistake to view cryptocurrency environments solely through the lens of price performance and supply mechanisms, and that many dynamics are ignored. Do you feel the technology and around blockchains and smart contracts can, essentially transform payments, financial services, and the wealth management industry?
You have to differentiate between the technology, blockchain or distributed ledger technology, and crypto assets. And I think when you look at any market, any asset class, any geography around the world, when you take out friction, volume goes up and price and risk go down. And when you look at the potential of distributed ledger technology to rip out friction, to get rid of friction in the asset management ecosystem and supply chain, it's massive. So I think firstly you have to think about it from the point of the automation or digitalization of a supply chain that has typically been very manual, full of risk, very fragmented. You've got different distribution models in every different country. So you have to think about, if you like, the digitalization or the virtualization of the fund structure and how that can be automated and digitalized in a much more efficient way, and then think about the assets within that wrapper, whether that is fixed income, equities, alts, private markets, illiquids, or as you said, crypto. So I think we're at this new dawn where we're seeing the use of DLT, both in terms of making our ecosystem better, faster, cheaper, as well as providing access to new products, but in a way that this new generation of investors will become more engaged with our industry.
Well, I like what Edward's talking about, not just clearing trades and building blocks of investments, but the investment experience. So you go to see him in Luxembourg or Dubai, and he's not just organising the plumbing for you, he's bringing you some fancy Japanese tea, roasted rice in there, and he's sharing that as part of the experience.
Yuri, I must say, I am jealous. I need to grab a cup after this.
I bought a tea bag for you.
Fantastic. Then we'll talk after the show. Thank you so much for joining us today.
Delighted. Thank you.
That's all we have time for. Thank you for joining us. See you next week.